Voter turnout for Japan's parliamentary elections marked a new post-war low. Nearly half didn't even take part. So despite Prime Minister Abe's renewed mandate of his economic policies, Japanese stocks fell on the first day after the elections. CCTV's Mike Firn reports from Tokyo.
It may not be the massive show of support for Abenomics the Prime Minister was hoping for, but with more than two-thirds of the seats in the lower house, the government has the power to push through its economic policies.
This election result will recharge PM Abe's political capital, which looked like heading south when scandals hit the cabinet in the fall.
It means that Abe's grip on power is good for another 2 years, but new urgency, a new sense of action now, that's unlikely to be forthcoming. Steady she goes is the message.
With the election out of the way, Abe can focus on unfinished business, preparing a supplementary budget to revive the economy. He may also cut corporate tax to help raise profits and persuade companies to increase wages.
The big story in 2015 Japan is going to be corporate earnings, corporate profitability. You've got a steady government that is providing steady monetary and fiscal stimulus. The key message for investors is corporate earnings can still grow much, much further.
But Japan's large manufacturers aren't sounding optimistic about the business outlook. Sentiment dropped 1 point to 12 in the Bank of Japan's Tankan survey. Companies say it's likely to fall another 3 points by March. One worry is the weaker yen, which pushes up the cost of imported raw materials and fuel. The government says it's watching forex markets to make sure the currency isn't falling too fast.
When the yen was depreciating quickly from 110 to 120, the Ministry of Finance and probably the government didn't like it because it was too rapid and too volatile, and they always want a stable currency market. And but we think the yen depreciation is still positive on the Japanese economy from the broad picture perspective, given Japan is a current account surplus country and a net creditor nation.
Yamada says the yen may fall as low as 130 to the dollar by the end of next year or early 2016, and then strengthen to around 123 over the next 12 months. Mike Firn, CCTV, Tokyo.